Hey everybody, I'm David with Bolivar Live, and welcome to another show, Insurance Talk with Dan Priest, or Priest Insurance Agency, a weekly show that we have at 4 o'clock every Monday afternoon, and it's always has to do with insurance, a lot of it here on Bolivar Peninsula, but we get off into pricing, and we're going to talk about pricing today and value ratio and whatever. He explained it to me earlier and I didn't understand. But remember, you can see Bolivar Live anytime on our social media channels, and now you can download Bolivar Live TV on our Roku and Amazon Fire TV and see us on the big screen. Same shows here, plus some more from the beach as we get into 2023. Dan, thanks for joining us, and he's not awake this morning, he told me, so he got up late. But we're going to talk about, we've been talking about price increases and making sure as values go up, insurance, you've got the right insurance. And that's what we're going to talk about today a little bit.
Exactly. So, insurance rates go up, insurance values go up, and I think what we've seen in the past 2 or 3 years is a change in construction prices. And so we want to talk today a little bit about insurance to value and the importance of it and how it can affect you in the event that you have a claim. Most of us, most people, or we think that, oh, I have $200,000 in insurance, and then you have a $60,000 claim, that it's covered because you expect to get $60,000 less your deductible. And sometimes it doesn't work that way because insurance is a contract. And so an insurance carrier they need to accept the right premium to pay for the risks. So one way to do that is with this concept of insurance to value. And it has to do with the relationship, the amount of coverage that you have and how much coverage it would take to rebuild your home, okay? So there's a relationship that goes with that called coinsurance, and that is the relationship of insurance that you have to what it's paid and the requirement to get paid, like that claim we were talking about, and getting $60,000 when you have a $60,000 claim. So it's usually expressed, the requirement is usually expressed as a percentage of replacement cost of the property, and the minimum coinsurance that a company normally requires is 80% to value.
So you have to have 80% of your insurance for your home.
Yes, there's different ways to insure. There's an actual cash value basis, there's agreed value basis. Most people are looking for replacement cost, meaning that if you have a $100,000 claim, your expectation is to get $100,000 less your deductible.
Right.
That's what you want it to do. Most people want their insurance to do. So, but you have the insured has some obligation to do that, and you don't want to be caught with a little not having enough.
Right.
So we're going to talk now about how that might work, okay? So here's an example that we're going to show you. Here's a house that's worth $500,000, and you have insured for $500,000 as well, and you have a claim for $125,000. Your deductible is 2%, and that's 2% of the insured value, or $500,000. Your coinsurance is 80%, okay? So the way this works is the first thing you do is take the amount that you should have against the amount that amount that you have versus the amount that you should have, and that $500,000 versus $500,000 is 100%. 100% is greater than $80,000. So the loss amount will be $125,000 less $10,000, and you get $115,000 for your claim, okay? This is a second example. So again, you're insured for $425,000.
On a $500,000
On a $500,000 home. The loss amount is $125,000. Pardon me, my deductible is wrong. The deductible should be 2% of $4,250. Okay, so it should be $8,500 there. The coinsurance is 80%. Your loss amount is $425,000, the amount that you do have, versus the amount that you should have, $500,000. That's an 85% relationship. 85% is greater than 80. Your loss amount down at the bottom, $125,000. Again, less the deductible is $115,000. It'll pay you exactly the same way as insuring your house for $500,000. Okay?
Now, is there any?
And that will be less premium.
I was going to say, is there a less premium, but it pays the same?
There is, and so this is an example of you have a partial loss of $125,000. Because that relationship is satisfied, it up to that limit of insurance of $425,000, this works exactly like being fully insured, okay? And as long as the insured understands that, they can do that. The way these two policies would differ is in the event of a total loss. In the event of a total loss, the dwelling is going to be $425,000 on this property, and on the other one, you'd have a $500,000 claim. So you may have a $75,000 shortfall. So one more example here.
So you may not be able to paint the inside of the house.
Might have to do that yourself, that's right. So here's an example of being underinsured. And this happens when, I see it as a possibility right now where people have not kept up with the changes in building costs. Say you have a $500,000 house here, your insurance amount that you have is $300,000. Again, forgive that deductible of 2%, it should be $6,000. The loss amount is still $125,000 and the co-insurance is 80%. So the way this worked is the amount of insurance that you do have, $300,000, into the amount that you should have, $500,000, that is 60% of the required replacement cost. 60% is less than $80,000. So in this event, you take your loss amount minus your deductible, leaves the amount that you're still left at claim, and multiply that number by 60%, okay? That leaves you with a net claim of $69,000, which is far less than $100 and $115. So that is how oftentimes people kind of get in a little bit of crossways with an insurance company, because those are the ways that most of the contracts read.
And it's if it costs $500,000 to build a house, but you paid $600,000 for the house, do you insure the $600,000 or do you insure it at $500,000?
Great question. So there are different values, and when we think about it, so and they kind of relate and they don't. So there's the value that you have on the tax roll, and so those things change, and oftentimes we're working to really get those down, and we show every negative thing to get that property value down, right? And then there's market value, what you can sell a house for. And that market value includes land, it includes location. So for example, a 1,000 square foot home in River Oaks in Houston would have a different value than a 1,000 square foot home in maybe the 3rd Ward of Houston, okay? So that's market value, and replacement cost is the cost it would take to replace that house.
To rebuild.
Whether that house is in River Oaks or whether it's in the 3rd Ward, the cost to rebuild that house, assuming the construction is the same. So those values are different. So market value does have a different relationship than replacement cost of a house and insured value.
So if you bought a house, and we had houses going crazy prices here, a year ago, and they paid top dollar for that house, they need to really look at their insurance to make sure, because if they had a total loss, they want to make sure they can get that house rebuilt as it was versus what they paid for it.
Yeah, and we're obligated to insure the value because we do represent both the client and the insurance company. So there is a calculator that agencies have access to many of them are available. But down here, there's different construction standards, and you have to adapt those into the building cost. The building cost here is different than it is, say, in Hardin County.
Yeah.
Okay, it's a different cost to build.
What about if lumber goes down? Don't see it happening, but if replacement cost went down, say you bought it whenever lumber was at its peak, and you build a big house, that could add up. Say it goes down 10% over the next couple years, so it doesn't cost you as much to rebuild that house. Can your insurance actually go down?
You can adjust it, and that you just do another replacement cost valuation and kind of see where it is, or utilize co-insurance.
Okay, cool. Well, if people have insurance, and a lot of insurance, we go over this every show talking about reviewing your insurance yearly. because building costs go up, land values go up, everything goes up. They might have furnished the house with new furniture. How can they get hold of you to make sure they have the insurance they need?
Well, you're right. People do need to take a look because all insurance kind of looks the same. Like, yes, I have insurance until you really need it.
Mm-hmm.
So keeping your insurance up to date is super important. We'd love to talk with you. Call us at 409-755-7600 or reach out to us through priestinsuranceenagency.com.
Yeah, because, you know, we say this just about every show. It's not a matter of if you're going to need it down here, it's when you're going to need it.
Yeah.
And used to be we just worried about storms. Now we've had some freezing down here where pipes burst and stuff, and so you really need to go through and look and understand your insurance, because just in the last year I've learned a lot about home insurance and how it works, and thinking I would be covered and I may not be, but I've also learned about that for business and the Bolivar Live Truck through Priest Insurance. So if you have any questions, please give them a holler. This is a weekly show. We're always talking insurance. In fact, I think we're planning on doing some shows explaining insurance over the next couple weeks, if I'm not mistaken.
Different segments of it.
Different segments and different steps on the insurance policy. So, Dan, thanks for joining us. Any last words of wisdom?
No, thank you.
Until next time, I'm David with Bolivar Live. Y'all have a great day, great week. Come see us. God bless, and bye-bye. Priest Insurance Agency has been located in the heart of Lumberton, Texas since 2001, providing a consultative approach and educating customers on how their insurance works for them throughout the coastal region of Texas. Priest Insurance specializes in the coastal region of Texas, covering home, auto, business, and recreational insurance. With ties to the coastal communities, Dan Priest has had the sand between his toes since 1972, with a home on Bolivar Peninsula in Galveston County. He survived a storm named Ike, but lost his home. With insurance coverage, his family was able to rebuild following the 2008 storm and continues to make memories beachfront. Priest Insurance specializes in the coastal communities, family dwellings, investment property, and business insurance. They've been there. Whether you're looking for or have a family retreat along the Texas coast, investment property, or a business, Priest Insurance would be honored to work with you and your family to make sure you're covered anytime trouble arises. For more information on Priest Insurance and their contact information, please visit their website at www.priestinsuranceenagency.com, or their office is open for phone calls with questions and consultation Monday through Friday, 8 a.m. to 5:30 p.m. by calling 409-755-7600. Priest Insurance Agency, working and educating customers, making sure they understand and have the coverage they deserve.